Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside. Like Riot Blockchain before it shot up 10,090%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,050%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of 4,000 different tickers and see exactly where the stock is most likely to go next, and in any type of market. Simply go to powergaugepreview.com for a free look. Again, that's powergaugepreview.com. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's April 12th, 2022. It's a Tuesday. We've got a big show coming up. We had the CPI number this morning, better known as inflation. It came in hot, but not quite as hot as a lot of people thought it was going to be. We'll talk about that. I also told you today, I'm going to cover what I saw at the big Bitcoin convention in Miami last week. I got a lot of notes I've taken. I'll give you my view on that. Even though Bitcoin's pulling back, I got some positive things I want to talk about. Then we're talking about e-commerce. We're talking about prices going up. People continue to spend. Even though prices are going up, things online, you can't even find things online. But people are still spending. All this and more coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me. This is Making Money. It is April 12th, 2022. It's a beautiful Tuesday morning here in Baltimore. If my voice sounds cracky or my eyes look tired, it's because I am. Once again, taking the 6:30 a.m. flight to get in here in time to do the show. And Greg, my producer behind the screen here, was with me on there. So now we're both tired. He gets to see what it's like to wake up at 4:30 a.m. to get in that Uber, to get to the airport, to get here. So we're ready to go, though. We got enough energy to get through this. The markets are up. So let's first take a look here at the market. And we can take a look here at the S&P 500. We're at the lows of the session, but we're still up 0.6% right now on the Spiders SPY. And that's just before 11 o'clock here East Coast time. And I'm going to tell you why the market's moving in a minute. But as you can see, we had a pretty ugly day yesterday, and we've had a bit of a pullback over the last 2 weeks. And on the chart, you can see we closed at the lowest level in 2 weeks yesterday, gapped up this morning. We're up really big. We're up well over 1.5%, but now only up 0.6, as I mentioned, near the lows of the day. And again, we're going to talk about why that's happening, the first 2 hours or so of trading, why it's been so volatile. So, let's dip into that, because the big news this morning was the CPI. For the month of March, Consumer Price Index, which measures inflation for you and I, the consumers. The headline number came in at year-over-year increase of 8.5%. That is the highest level we've seen since the early 1980s. The core level, which removes energy and food, came in at increase of 6.5%. Again, the highest number since the early 1980s. Month over month, the CPI headline was 1.2% month over month. And if you look at the core number month over month, it was only at 0.3% versus an estimate of 0.5%, so a little bit below that. But again, these numbers, as I mentioned, year over year, are the highest that we've seen in about 40 years. So they still are extremely, extremely high. But the market gapped higher on this, and yields on the 10-year Treasury and the other Treasuries actually fell on the news. And you would think, well, it continued to come in hot, very hot, as a matter of fact. Why did stocks actually rally on this, and why did yields pull lower? Because according to one of my analysts here at Stansberry, the whisper number, if you will, what people were talking about on desk, they didn't put out the analyst, but people were whispering around 11% they were expecting. So coming in at 8.5 is well below that whisper number. So there was a bit of a relief, if you will. People that were thinking a number was going to come in really hot, hotter than it did selling already. So a lot of that selling was already gone. And that is, again, why we saw people buying stocks, especially in the growth. Nasdaq was up even more this morning. And if you take a look at the Qs, the QQQ, which measures the Nasdaq 100, it still has a gain of 0.8%. But again, on low of the day, at one point was up nearly 2%. So I don't like the action, because we opened up higher based off, okay, we baked in these high inflation prices already, and we're moving lower. Who knows where we end the session? There's obviously 5 hours left in the day, so a lot can happen. I'm going to get back to CPI in a minute, but there was a bit of a headline that came through that there was a shooting at a Brooklyn subway station. At least 5 people shot. You can see the pictures online. You can see people shot. Looked like they're all shot in the leg, so hopefully nobody died in this situation. But a guy with a gas mask and some type of construction uniform on. So that obviously probably spooked the market a little bit. I don't know if that's the entire reason we're seeing the sell-off after the initial rally. But we did see that, obviously, when that happened, the market started to sell off a little bit. So let's go back here to the CPI numbers. I want to break these down a bit. I don't like talking just flat news, but I want to give you some numbers, and within these numbers, give you my comments on that. First, auto prices have been a big component of why we've seen CPI so high. And used car prices, used cars and trucks, are down 3.8% month over month. So a big drop. And they were down, that number is actually one of the largest drops we've ever seen for used cars and trucks. That being said, year over year, the prices of used cars and trucks are still up 35.3%. So I view this in a few ways. One, obviously, prices are still much higher. And I'm in somewhat of a market for a car right now, and it's tough to get it. We have supply chain issues. We have shortages of vehicles, so prices go through the roof. And especially new vehicles are very tough to get. Well, then again, a lot of this to supply chain. NIO, which is NIO, trades here in New York Stock Exchange, one of the big 3 auto manufacturers in China, came out over the weekend and said that they're actually shutting down their facility because not as much their facility, but all their suppliers, majority of suppliers, their facilities have been shut down because of COVID in China, leading to not getting parts in, and they can't put together and produce vehicles. So they're shutting it down until they get the supply chain back. So again, those are Chinese-based companies, but you're seeing that all over the world, and that's leading obviously to higher prices. What I'm seeing though in the used auto market is because prices have gone up so much, it's simple economics, supply and demand. So demand remained high for used autos. Supply dropped, so price had to go up to meet this. We're seeing the opposite now. Price has gone up so high that demand's going to drop. As demand drops, prices have to come down to meet that demand. So what I'm seeing, and what I think we'll continue to see, is the prices of used autos and trucks continue to drop. And year over year, those numbers will get better, and that's going to lower the CPI, which would be really good for that headline number and good for people that are in the market for a vehicle at this point. Shelter costs, rents, and obviously housing makes about 1/3 of the CPI. And month over month, that was up 0.5%, which is high month over month. The 12-month gain is about 5%. That's the highest we've seen 12-month gain since May of 1991. Again, folks, I see this component, which is 1/3 of the CPI. I see this component peaking out as well. We've had mortgage rates shoot up dramatically. I mean, booming mortgage rates to the highest level we've seen in well over a year. And that's going to put a bit of a damper on people out there buying homes, which again, I'm already seeing it in South Florida. Prices are coming down. There's not a lot of inventory out there still, but the ones that are out there seeing prices come down a little bit because they started at such high levels. So again, that's 1/3 of CPI. And if you're pricing people out and with higher mortgage rates, you can afford less home, prices have to come down. So again, with used cars, housing, shelter, rents, I think we're peaking out or very close to us. I think, again, we're going to see that come down. A couple other areas. Food month over month was up 1%, year over year 8.8%. That might continue to move higher because I'm doing an entire issue going out next week on the effects of not only the amount of grains and food coming out of Ukraine and Russia, but also the fact that we have some major droughts around the world, especially in California. We have the 3rd lowest snowpack as of April 1st that we've seen in California in the last 30 or so years. And when that typically leads to a drought. And if you have a drought, obviously lower yields on crops, prices go up. So the government already came out and they said they believe corn output this year will be 17% lower than last year. So we could see food prices remain high, unfortunately. Energy prices, obviously, for the headline number, not the core. The core takes energy and food out, remember. But the headline number, energy month over month, 11%. Gas, 18.3% month over month. Energy year over year, 32%. Again, a lot of that has to do with Ukraine, Russia, but that's not everything. we are seeing demand pick up as places have reopened, even though Shanghai is shutting down or is shut down. A lot of places around the world are reopening. I mean, just look around. I was just talking to one of our legal counsels here, because he saw I just came in with a bag, and him and his family were just in Orlando for spring break, and his kids and his wife, and saying how planes were packed, cars everywhere, hotels packed. I said, I see it every week. I fly almost every week, and this 6:30 a.m. flight is booked every single time. It's unbelievable. So you're seeing demand for reopening, which is leading to demand for more energy, which of course leads to higher prices as well. If you look at commodities and you take out food and energy, actually fell by 0.4%. Good. It's good to see it like that. A lot of this, you're seeing inflation. The government's going to blame it on Putin and Russia. You can't put all the blame on that. It's just not real. It's just not realistic. Prices are going up way before that. We have demand increase, as I just mentioned. We still have supply chain issues, which again, if you have increasing demand and supply is dropping and even stagnant, prices go up. Sure, Ukraine has some weight on that, but it's not the end all be all. Even if that was settled tomorrow, which I'd love to see it settled tomorrow. I'd love to see it settled yesterday. You're still going to see, unfortunately, some inflation. But again, I hate to be the guy who comes out and says this, but I think we are at or very near a peak right now. Again, I'm not just trying to be Pollyanna here. I really believe when I'm looking at these numbers, some of the areas such as used cars, obviously oil. You look at oil, was at 130 last month. Now we're down around the high 90s. So if this pulls back, it should trickle to gasoline prices and come down. So the food's one that bothers me, but outside of that, I think we do have a potential here of topping out here in inflation and moving lower in the next few months. Maybe I'm just hopeful. I don't know. Maybe I'm just hopeful, but I think that we will see that. One other thing, I want to mention the 10-year yield. As I mentioned, the yields actually came down on this because again, we've priced in that the Fed's going to be extremely strong-handed. Coming in this next meeting here in May, and then going forward. The 10-year hit 2.79% yesterday, was a high, 3-year high, down at 2.71 right now. So we pulled back a little bit from there. The other big story that I've talked about, everybody else talked about, is the inversion of the yield curve, the 10 and the 2, the 10 and 3 month. There's different ones you can look at. But the 10-year versus the 2-year, when the 2-year yields more than a 10-year, it's inverted. Well, that only inverted, folks, keep in mind, for like a day or two. And it's back to 0.29%, so 29 basis points. Basically meaning that we have the 10-year at 2.71%, and we have the 2-year at 2.42% right now. So it's gone back to the way it should be. It's not inverted. So typically that inversion indicates that a recession is about 18 months away. It means the peak of the S&P 500 is about 18 months away. We've talked about this many, many times, that the market usually rallies big, high 20% in that 18-month time frame on average. All that being said, though, when it only inverts for a day or two, I don't know how much credence I give it. Again, we're going to keep an eye on it, but again, I don't know how much credence I give it. So that's something to keep an eye on. It's not as if it inverted and kept going. So let's just keep an eye on that, and I'll watch that yield spread for you. And as it changes, I'll let you know. But right now, it's 29 basis points different in the plus side, not inverted at this time. So to go along with CPI, I wasn't going to talk about this today, but I saw this number come out this morning, that e-commerce sales, they grew in March. They are up 7% from a year ago. This is according to data from Adobe. They do some good data. And online sales reached $83.1 billion in the month of March, which for an annual run rate, if you smooth that over 12 months, of nearly $1 trillion. So that's a big number. And it's a real big number if you consider in 2021, it was about $885 billion. That was a 9% increase over 2020. And 2020's increase was 41% over 2019. Obviously, we were all locked home, shut in, so we were buying stuff online. That's why it's so high. But what I'd like to see is you have 9% gain over that. If it be coming in at a run rate about $1 trillion, it's going to be a run rate, so it's going to be an increase, of about 12 or 13% or so. And that's still really good because we're going from big numbers. It's not like we're starting from a low number. What else came out over this? Some other numbers here. The total accelerated 24% in a month of March, just over February. So you're seeing a total increase, and that's even as prices continue to go up. And that's pretty impressive. You see that. Also, this is a number that kind of caught my eye. that they noted that online shoppers continue to run into products that have shortages. 3.1 billion out of stock messages when people want to buy stuff. That's crazy. That's a ton of messages. And that they came out and they said online prices rose sequentially month over month, 0.3% online, 3.6% year over year, and the 22 consecutive month of increasing prices for online goods. The biggest gain year over year is for apparel, 16.3%, 9% for groceries, 8.5% for tools and home improvement, and pet products, 7%, which people obviously spend a lot on their pets. So I wanted to mention that only because, we have prices going up, but people are still spending. And we all know that the consumer makes up about 2/3 of the GDP, which is the economy here in the United States. So it's important to see that we continue to spend. One other number to kind of bring this all together is if we take a look at how much we're actually making versus inflation, it's still negative. Even though year over year we have wages up about give or take 6%, we have inflation 8.5%, so you're still losing out. But again, if I'm right and we're close to peaking out in inflation and prices start coming down, you're not going to see suddenly the companies take back your salary and say, it's going to be lower because of inflation. Once inflation comes down, then we're actually making more. That will be another boost to the consumer. So that's going to see, even though short term it's going to hurt you, longer term I think it's going to be good. And we're going to see a higher demand for higher wages out there because a lot of people, this great resignation, won't take less wages. So the way it plays out the next few months, next couple of years even, is going to be pretty interesting to watch because and again, I'm optimistic it all works its way out. The Fed catches up a bit. That by raising interest rates, it keeps inflation in check, slows down the economy a little bit, but it's a very short-term slowdown before we kind of come back. Again, things could go wrong along the way. Don't get me wrong, but I think that we are seeing a potential of that happening. So, again, optimistic on that. So Bitcoin, let's talk about that. As I mentioned, I was at the Miami Bitcoin conference last week. I didn't get as much out of it as I thought I would. It was a big rah-rah, honestly, for Bitcoin, and I'm a believer in Bitcoin. It's one of my largest holdings in my own portfolio. I recommend that most people have an allocation to it. To me, it is truly a store of value. It's not internet money. It's a store of value, similar to gold. I call it digital gold. Many other people do too. But a few things, I took some notes while I was there that I thought was pretty interesting. There was a session on the main stage with Cathie Wood of ARK Investments. Many people know who she is. And Michael Saylor of MicroStrategies, and obviously a big proponent of Bitcoin as well. They both are. So they may have a bit of a biased view because they both hold them in their funds and their companies. So, but a few things that came out of it. Cathie Woods came out to basically 70% of all Bitcoin out there right now is owned by long-term holders. Me being one of them, and that's good to know. And Michael Saylor came out. He said that every exchange needs to implement Lightning, which is, I don't get too deep into the woods here, but that basically is, to me, kind of the Visa of cryptocurrencies, which helps facilitate payments. And where, depending on what exchange you're on, if I'm on one, you're another, I'm going to pay you in Bitcoin. If we're on a Lightning network, boom, we make that very quick, cheap, fast, seamless transaction. What else here? I thought this was interesting too. Michael Saylor said, not supporting Lightning is like not supporting the internet. The internet kind of makes everything run. I thought that was pretty fascinating. He made a good line, and people are going to love me and hate me for this one, but he said, if you want to turn $250 million into $6 billion, which he claims he did, he said, buy Bitcoin, do not buy gold. And I agree. Because he said if he would have bought gold at the same time, he'd be about sitting at $250 million. He wouldn't have made any money. This was from Cathie Wood right here. She has a base case for $1 million Bitcoin in the next 10 years. I hope she's right. I mean, I don't know about that. I hope she's right. It seems a little high to me, but she believes that the catalyst to that is if 2.5% of all the institutions, the big money, own Bitcoin. That's how you get there. I see that as a possibility. I do. Even if it comes in at half that, at 1.25%, and she's right with the numbers that her and her team did, that's still Bitcoin at $500,000. So that's a case for me. If 70% is owned long term, 90% of it's been mined. And institutions start getting in little by little, which they are already, and they're going to continue to do it because they have in demand from their large clients. It becomes a supply and demand thing again, and that's where I see the price going higher. Michael Saylor ended the little gathering with what we can do is go out and educate other people on Bitcoin, which I feel I do, so I'm doing my job here. And he said, you do not sell your Bitcoin, which obviously everybody clapped for that. And again, you do what you want with your Bitcoin. Obviously he is a proponent of it because he owns a ton of it. Let's see what else. Robinhood, a woman from Robinhood came out. She made an announcement that they're implementing Lightning into their platform, which again, Lightning's not a publicly traded company, or I would talk about that. It's private, but they continue to get big funding. And they said that Robinhood came out and said the number one recurring buying of an asset class, basically, they have recurring buying that constantly goes into it. Dollar cost averaging is Bitcoin is the number one asset class, which I thought was, again, it shows how people believe in it long term. The other speech that I really found interesting was Peter Thiel. If you don't know Peter Thiel, Peter Thiel, first outside investor in Facebook. Peter Thiel, co-founder of PayPal, on and on. The Founders Fund is what he has now. And he talked about the Bitcoin being the canary in a coal mine when it came to inflation. And it makes sense because, really Bitcoin started moving up a little bit late last year, right as inflation was coming in. And he went on to say that basically central banks are bankrupt. And I found that fascinating. His speech was, they really went after a few people. One of them was Warren Buffett. And he basically said, he called them enemy number one. And he said, these are the people that are slowing down the adoption of Bitcoin. Warren Buffett being one of them. Him and his cohort, Charlie Munger, who called Bitcoin rat poison recently. Folks, you have to remember, Charlie Munger is 98. And what's Warren Buffett, 95, maybe something like that? Gentlemen have done a lot for the world. They've done a lot for investing, and they're legends. And I can't say anything about that. I can't say anything bad about them. I don't have to agree with everything they do. I won't say anything bad about them as people. But you have to keep in mind, at the great financial crisis, 2008, when we had the opportunity as individual investors to go buy Goldman Sachs or Goldman Sachs preferreds or Goldman Sachs bonds and make a lot of money. But Warren Buffett got a sweet deal. When he went in and bought shares of Goldman Sachs and backed them up, he got a super, super sweet deal nobody else could get. So they have a bit of an advantage over us. I was listening to a podcast on a plane today, and they were talking about how Warren Buffett, it was like 28 years ago or something like that, almost 30 years ago, said he would never buy a tech company. Never. Well, never only lasts about, 28 years? Because, Berkshire Hathaway came out recently, said they're buying an HP. So they change with the times. He doesn't anymore. He's so old that he doesn't have to really change with the times anymore. What does he care? Again, Warren Buffett, you don't go to advice over innovative things. It's just that's not his wheelhouse. And it's just he doesn't do that. So nothing against him, but he's never going to be right on innovation because he's missed out on it for literally decades. Peter Thiel also went after the bankers, Jamie Dimon, which I think he should go after. Larry Fink of BlackRock. He also went after ESG, which is, environmental, social governance, and that's basically investing in companies that are doing good for the environment, good for the people, and there's nothing wrong with that. I back that, but he went on to basically just bash them, and he said when you think of ESG, think of CCP, which is the Communist Party in China. So I kind of get it, and again, I'm not for or against ESG. If you want to invest in ESG, do it. If one of the companies I invest in is very heavily in ESG, fantastic. I want to back up the government, or not the government, sorry, the world, and I want to back up humanity. But I would not invest in a company just because it's doing good for humanity. I invest to make money. That's what I do. If I want to do something for humanity, I'll give to charity. I'm not going to do it through the stock market. He also said a lot of people that come out, like a lot of these CEOs, they're like pro-blockchain, below blockchain, pro-blockchain. But he said it's actually anti-BTC, anti-Bitcoin, because really you're saying, you're, instead of saying pro-Bitcoin, you're pro-blockchain. And I thought that was kind of funny. He talked about BTC, which is Bitcoin versus ESG, and then he showed a screen of and it said gerontocracy, which is basically meaning get rid of the old people because they're holding back the adoption of Bitcoin and digital currencies. And I don't want to say anything negative about older people, but it is tougher to get older people to come onto this. Do you remember trying to get either your parents or your grandparents, or maybe it was you, to use a cell phone? How do I need a cell phone for? You look around now, most people I see in Florida, it's an older demographic down there, much, much older than me, in their 80s and stuff. They all have their phones on their iPhones at the restaurants and bars, just like the young kids are. You start getting used to it. You can check stuff. You get FaceTime your grandkids. Yeah, it makes life easier, folks. It's made life better, honestly. So same thing's gonna happen here with digital currencies, aka Bitcoin and the others. It's just a matter of time, in my opinion. So the price of Bitcoin started falling from about 46,000 when it kicked off, and we're right at 40,000 right now, right teetering on that 40,000 line. When I talked about a week or two ago about breaking above 45,000, that was important to hold that, and we didn't hold it. I don't like the action right now in Bitcoin. I don't like the short-term action in the market right now. It doesn't mean I'm selling anything, absolutely not. I just think you maybe want to sit on your hands and wait for maybe a better buying opportunity in the next couple of days here, next week or two. Let the market tell you. I just don't like the weird actions going on, especially today. We're off the lows of the session, but we're well off the highs right now. But when we talk about Bitcoin, I heard this today. I think somebody mentioned it on what I was watching on the plane this morning on the way here, that over the last 90 days, the correlation between the Nasdaq 100, which is the 100 largest non-financial companies in the Nasdaq, think Apple, think Microsoft, Google, Facebook, etc. The correlation between that group of 100 stocks and Bitcoin over the last 3 months is 90%. That means 90% of the time they're moving in tandem. So, who's leading who here? Is it Bitcoin leading the tech stocks, or is it tech stocks leading Bitcoin? I don't know, and I don't care. What this tells me is Bitcoin right now is being treated as a risky asset, which oftentimes it is, but it's being lumped into the stock market. And there will, once again, I think, be a disconnect from that. But right now it's being lumped in with tech stocks and growth stocks, which isn't fair. There will be some points where in time, growth stocks are a better buying opportunity than Bitcoin and vice versa. I think right now they're both good buying opportunities, but Bitcoin shouldn't be lumped in with that, because with inflation doing what it's doing, even though I think we are at or near a peak in the headline numbers and the core numbers, I think Bitcoin should be doing much better than it is right here. And again, anywhere below 40,000 as a long-term investor, I like as an opportunity to buy. I don't know if it goes to 32 before it goes to 62. I have no idea. I still believe we will get back to the highs of 69,000. I think that's inevitable. I don't know the time frame, but I think if I had to guess the next 12 to 18 months, that will happen. And again, Bitcoin to me is a large holding. You don't have as large as my percentage, but to me it is a digital gold. It's a store of value. It's anti-government. You don't have to worry about what the government's going to do and manipulate and print more money and manipulate the fiat currencies, whether it be the U.S. dollar, the yen, the euro, etc. They are manipulated. The bottom line, you can't manipulate Bitcoin. So when it comes to that, you take out that. I don't care what party you are, left or right. Most of us are fed up with government. And if you are, Bitcoin's a good way to kind of thumb the government, in my opinion. And at the same time, you're doing that, creating a store of wealth, and eventually that correlation will spread back out again to a lower number and give you a better diversification by adding Bitcoin and other digital currencies to a stock portfolio. So let's take a look at a chart here one more time real quick. We have the Nasdaq 100 to Qs, about 1.1%. I loaded up about 0.6%. I looked at it about 30 minutes ago. So let's see how we close. I have no idea, and we'll catch up on Thursday. But just to wrap up the show here, folks, markets right now a little choppy. I would not be overly aggressive doing anything. Definitely not selling, but I would not be overly aggressive buying. We have inflation at 40-year highs, but again, I think we're peaking out by looking at some of these underlying numbers. I think we're peaking out right now. That spread I talked about, the inversion of the yield spread, not inverted anymore, only inverted for a day or two. What's that mean? We'll keep an eye on that going forward. Bitcoin, as I just mentioned, hanging right around the $40,000 level. probably have a lot of volatility going in there. I talked about the shooting in Brooklyn. Hopefully everybody's okay and they catch the piece of dirt who did that. And again, online sales show that the consumer is still strong. And to me, that's a good sign. Consumer, 2/3 of our economy, should continue to keep going. Again, folks, there's 3 things we're trying to achieve every time we do this show. We want to educate you, so hopefully educate you a bit here on the CPI, on the inversion yield curve, and what's really going on behind the scenes, and with the Bitcoin, bringing some headlines to you from the conference. We also want to have fun. So hopefully we had a little bit of fun today. And again, the last thing we want to do, number 3, is make some damn money. And hopefully we're making some money with the market up today, up about 1.2% here on the Nasdaq 100. But again, folks, thank you so much for the support. Thank you so much for watching. Don't forget to like. Don't forget to subscribe to the channel. Don't forget to share with your friends and family as well. Thank you so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.